Hey everyone, and welcome back to Talk Tickers. We're diving deep into Rio Tinto's Q4 2024 earnings call today.
Hey, lots to unpack.
They just dropped a ton of info about, their performance, future plans, and how they're handling some pretty big challenges.
Big challenges, absolutely.
Like cyclones and potential tariffs. So we're here to help you make sense of it all.
It's a fascinating glimpse into the state of the global mining industry.
Okay, so let's start with the big picture. Rio Tinto had a pretty solid year, wouldn't you say?
Yeah, absolutely. Despite the kind of complex global economic backdrop, their underlying EBITDA was down just 2%.
Wow.
And that's impressive considering iron ore prices were lower than last year.
That's a key point. For listeners who might not be super familiar with the mining industry, iron ore is like Rio Tinto's bread and butter.
Right.
But it's a cyclical commodity, and prices can fluctuate quite a bit.
Yeah, exactly.
Yeah.
So the fact that Rio Tinto managed to kind of hold steady despite those price swings is a testament to their diversified portfolio.
Okay.
Copper and aluminum had a strong year, picking up some of the slack from iron ore.
Diversification. That's something we talk about a lot on Talk Tickers.
Right.
And it seems to be paying off for Rio Tinto. It's like they're not putting all their eggs in one basket anymore.
Yeah, and on top of that, let's not forget about their operational improvements.
Yeah.
They've been focusing on boosting productivity and controlling costs, and, we're starting to see those efforts bear fruit.
So they're leaner, they're more diverse, and they're still generating solid profits.
Yeah.
That's got to be reassuring for investors, especially with all the economic uncertainty out there.
For sure. It certainly paints a picture of resilience, but let's not forget, it's not all smooth sailing for Rio Tinto.
Uh-huh.
There are some headwinds they're facing.
Okay, let's dig into some of those challenges.
Yeah.
We've got to talk about those cyclones in Australia. Those were some pretty intense weather events, and they had a big impact on Rio's iron ore production.
Oh, yeah. They really did. Those cyclones and heavy rainfall led to a loss of 13 million tons of iron ore production. That's a significant chunk of their output, and it highlights the risks they face from Mother Nature.
Think about that for a second. 13 million tons. It's crazy how much these weather events can disrupt, global supply chains.
It's incredible.
Yeah.
And it raises the question, how is Rio Tinto going to deal with that shortfall?
Right.
Will it affect their overall production targets for the year?
Well, according to the earnings call, they're maintaining their overall shipment guidance for the year. They seem confident they can make up for the lost production.
That's interesting considering the scale of the disruption. Where will they find that extra capacity?
Here's where it gets really fascinating. They're saying the constraint for iron ore production isn't actually their port or rail capacity. It's getting access to more land for mining.
That's a key insight that, might surprise some listeners.
Yeah.
You might think a company like Rio Tinto has unlimited resources, but even they face real-world limitations.
It's like they're running up against the edges of their giant sandbox.
Exactly, and it highlights just how massive their operations are in the Pilbara region of Australia.
Yeah.
They're basically mining iron ore on an industrial scale.
So land access is a key challenge for them moving forward.
Yeah.
But they also have this massive new iron ore project in Guinea, Simandou, that's supposed to come online soon. Could that help fill the gap?
Simandou is actually ahead of schedule and expected to start production at the end of 2025.
Wow. So we're talking about a project that's going to produce 6% of the world's seaborne iron ore. That's the stuff that's shipped internationally.
It's massive.
It's a huge chunk of the global market.
It raises a crucial question for investors.
Okay.
Will the market be able to absorb all that extra iron ore, especially with steel demand facing headwinds globally?
That's the billion-dollar question, isn't it? If China's economy slows down or if the global economy takes a downturn, will there be enough demand for all that iron ore?
Exactly. It's a bet on continued growth in demand for steel,
Right.
which is used in everything from construction to manufacturing. It's a gamble, but one that Rio Tinto seems willing to take.
Okay, so iron ore remains a massive part of Rio Tinto's business,
For sure.
but they're also trying to diversify away from it. What's the strategy there?
They're focusing on copper and aluminum,
Okay.
which are also essential for the global economy, but perhaps less susceptible to the same cyclical swings as iron ore.
Right, that makes sense. Copper and aluminum are both crucial for things like electric vehicles, renewable energy, and infrastructure projects. As the world shifts towards a greener future, demand for these metals is only going to increase.
It is. And Rio Tinto is positioning themselves to capitalize on that trend. Their copper production is increasing thanks to the ramp-up of the Oyu Tolgoi mine in Mongolia,
Okay.
which is set to become the world's fourth largest copper mine by the end of the decade.
Well, you told Guy, that was a product with a lot of challenges, wasn't it? Cost overruns, delays, political hurdles. It seemed like it might never get off the ground.
It was a challenging project, no doubt, but it's now on track.
Okay.
And they're starting to see the benefits of that investment. It's a good reminder that these massive mining projects take time and patience,
Right.
but the payoff can be huge.
It's also a reminder that investing in mining can be risky.
Oh, absolutely.
There are a lot of things that can go wrong, from political instability to environmental disasters.
Yeah,
But when these projects succeed, they can generate enormous profits.
absolutely. So while Rio Tinto is diversifying, they're still taking on substantial risk.
And speaking of risk, let's talk about aluminum. They're expanding in that area too, right?
Yeah, they are. They're making a big bet on aluminum. Their new AP60 smelter in Canada, which is the first new smelter in the Western world for 16 years, is on track to start production soon.
So they're really doubling down on aluminum.
Yeah.
What's driving that strategy? Is it just about diversification, or is there something else at play?
Well, it's partly about diversification, but it's also about the energy transition. Aluminum is lightweight, durable, and infinitely recyclable, making it a critical material for electric vehicles, solar panels, wind turbines, all the things that are going to be crucial for building a greener future.
That makes a lot of sense. So they're betting that as the world moves away from fossil fuels, demand for aluminum is going to skyrocket.
That's the bet. But there's a potential snag. Remember those tariffs we mentioned earlier?
Yeah.
Well, there are concerns about potential tariffs on Canadian goods entering the U.S. And Rio Tinto's aluminum smelters in Canada could be caught in the crossfire.
That's a huge risk for Rio Tinto, especially if they're betting so heavily on aluminum as part of their growth strategy. What have they said about those potential tariffs?
Well, their CEO, Jacob Stossholm, was actually in Washington, D.C. during the earnings call trying to get a handle on the situation.
Really?
Yeah, they're trying to understand the new administration's stance on tariffs and make the case that their Canadian aluminum production is actually beneficial to the U.S. economy.
It sounds like a tricky situation. They're trying to walk a fine line between promoting their interests and avoiding a trade war.
It's a high-stakes game of diplomacy,
Yeah.
and the outcome is far from certain.
It's a reminder that for mining companies, it's not just about digging up rocks. It's about navigating these complex political landscapes and anticipating global trends.
It's about understanding the interconnectedness of the global economy and making strategic bets on the future.
Speaking of bets on the future, Rio Tinto is also making a big push into lithium, which is one of the hottest commodities in the mining world right now. It's all about electric vehicles, isn't it?
It is. Lithium is a key component of the batteries that power electric vehicles. And as demand for EVs continues to grow, the demand for lithium is going to explode.
So Rio Tinto is trying to get in on the ground floor of this lithium boom. What's their strategy there? Are they building new mines, acquiring existing ones, or both?
They're doing a bit of both. They acquired Rincon Lithium in Argentina
Okay.
and are already producing lithium there.
Wow.
And they're set to close their acquisition of another Argentinian lithium company, Arcadium, very soon.
So they're building a serious lithium portfolio in Argentina, which is one of the world's top lithium producers. It's a smart move, wouldn't you say? They're getting access to high-quality lithium resources in a stable jurisdiction.
It's a strategic move, that's for sure. They're positioning themselves to be a major player in the lithium market, which is expected to grow exponentially in the coming years.
But as with any mining venture, there are risks. They're investing a lot of capital in these lithium projects, and there's no guarantee that lithium prices will stay high.
Right. It's a bet on the future of electric vehicles.
Yeah.
If that bet pays off, Rio Tinto could reap enormous rewards. But if it doesn't, those lithium investments could turn sour.
So it's a high-risk, high-reward scenario. Yeah. That's something investors need to keep in mind when they're evaluating Rio Tinto's prospects.
Absolutely. It's a story of diversification, transformation, and risk-taking. Rio Tinto is betting big on the future, but there are no guarantees in the world of mining.
Okay, let's take a quick break and come back to talk about their financials, those generous dividends they're paying out, and their overall strategy for navigating this complex and ever-changing mining landscape. Welcome back to Talk Tickers. Before the break, we were unpacking Rio Tinto's big moves into copper, aluminum, and lithium. They're clearly betting on the metals of the future, but how is all that playing out in their financials? Let's dive into the numbers.
Well, Rio Tinto delivered strong cash flow in 2024, with operating cash flow rising 3% to reach $15.7 billion.
That's pretty impressive considering they were dealing with lower iron ore prices and those cyclones in Australia. It seems like their cost-cutting measures and diversification strategy are really paying off.
Yeah, their focus on controlling costs is definitely showing results. They've implemented various initiatives to, streamline operations and optimize their supply chain, which has helped to boost their margins.
So they're becoming more efficient, which is crucial in a commodity market where prices can be volatile. Can you give us an example of how that's translating into actual savings for Rio Tinto?
Sure, their unit costs for copper, for example, were down 4% in 2024. That means they're producing each ton of copper more cheaply, which gives them a competitive edge in the market.
That's a significant improvement. And it's not just about copper, right? They're also seeing cost reductions in other areas of their business.
Absolutely. It's a company-wide effort to become leaner and more agile, and it's paying dividends literally.
Okay, let's talk about those dividends. Rio Tinto has a reputation for being a generous dividend payer, and they certainly didn't disappoint this year. They've paid out 60% of earnings for 9 years straight, totaling a whopping $72 billion.
That's an amazing track record. They're clearly committed to returning value to shareholders. But some analysts are wondering if they can maintain that level of dividend payout given all the money they're spending on these big growth projects.
That's the million-dollar question, isn't it? Can they keep those dividends flowing while also investing billions in new mines and smelters? It's a balancing act for sure.
It is, and they're facing some tough choices. If they want to maintain that 60% payout ratio with their capital expenditures increasing, they might have to take on more debt.
That's a risky move, especially in a rising interest rate environment. But on the other hand, if they cut the dividend, it could send a negative signal to the market.
It's a classic dilemma for companies in a growth phase. Do they prioritize short-term rewards for shareholders or long-term investments that could generate even bigger returns down the road?
It seems like Rio Tinto is trying to have it both ways. They're betting that these big investments will eventually pay off, generating enough cash flow to sustain those juicy dividends. But it's a gamble, no doubt about it.
It is, and investors will be watching closely to see how this strategy plays out.
Speaking of strategy, we talked about their diversification into copper and aluminum.
Yeah.
But what about lithium? Those investments are still in the early stages, so they're not having a big impact on their financials yet, right?
That's right. But they're ramping up production quickly. We can expect those lithium investments to start showing up in their earnings in the coming years.
So it's a long-term play. But with lithium prices soaring, it could be a very lucrative one. They're essentially trying to position themselves at the forefront of the electric vehicle revolution.
Exactly. They're betting that the demand for lithium-ion batteries is only going to increase as electric vehicles become more mainstream. And if they can become a major supplier of battery-grade lithium, they could reap enormous profits.
Okay, let's shift gears and talk about their overall profitability. How are their margins holding up in this challenging environment?
Their EBITDA margin was 38% in 2024, down slightly from the previous year, but still healthy considering the headwinds they faced.
So they're maintaining profitability despite the lower iron ore prices, the cyclones, and all the money they're spending on growth. That's a testament to their cost-cutting efforts and their diversified portfolio.
Precisely. They're demonstrating resilience and adaptability, which are essential qualities in the cyclical world of mining.
So to sum up, Rio Tinto is delivering strong financial performance, while also making big bets on the future. They're trying to strike a balance between rewarding shareholders today and investing for growth tomorrow. It's a high-wire act, but so far they seem to be managing it pretty well.
Yeah, they've laid out an ambitious plan and they're executing on it. But there are certainly risks involved. It will be interesting to see how they navigate those risks and whether those bets on the future pay off.
Okay, let's shift gears and talk about Rio Tinto's overall growth strategy and what it tells us about the future of the mining industry. We'll also have a little fun with our This Is Not Financial Advices segment where we'll throw out a crazy but plausible trade idea.
Sounds good.
Welcome back to Talk Tickers. We've covered Rio Tinto's financials, their big diversification moves, and those looming tariff worries. Now let's zoom out and look at their overall growth strategy. What's the big picture here?
I think the big picture is they are going all in on the energy transition. Their investments in copper, aluminum, and lithium are all geared toward capitalizing on the growing demand for these metals, which are essential for, electric vehicles, renewable energy, and a host of other green technologies.
So they're basically transforming themselves from an iron ore giant into a critical minerals powerhouse.
Yeah.
They're betting that the world is going green and that they can be the ones to supply the materials needed to make that happen.
It's a bold vision, and it seems to be resonating with some investors.
Okay.
But there are some big challenges that they'll need to overcome.
Let's talk about those challenges. What are the biggest hurdles they face in executing this strategy?
Well, for starters, the geopolitical landscape is always a wild card for mining companies. We've already talked about the potential tariffs on Canadian aluminum, but there are also political risks associated with operating in countries like Mongolia and Guinea.
Those aren't exactly known for their stable political environments. A sudden change in government or a new round of resource nationalism could really throw a wrench in their plans.
Right. And then there are the operational challenges that come with, developing these massive mining projects. We're
Yeah.
talking about huge upfront investments, complex engineering, and, careful environmental management.
Right.
There's a lot that can go wrong.
And let's not forget about the permitting process.
Yeah.
Getting all the necessary approvals to build a new mine can take years, especially with increasing scrutiny on the environmental and social impacts of mining.
Absolutely. It's a long and complicated process, and it's only getting more difficult as environmental regulations tighten and communities become more vocal about, protecting their land and water resources.
So Rio Tinto is facing a whole host of challenges as it tries to reinvent itself for the energy transition. It's not going to be easy.
Definitely not going to be a walk in the park. But Rio Tinto has a long history of overcoming these kinds of challenges. They've been in the mining business for over a century,
Wow.
and they've seen it all.
Experience counts for a lot in this industry, doesn't it?
It does. And they're also bringing a lot of financial firepower to the table. They've got deep pockets,
Okay.
and they're willing to invest for the long haul.
Okay, let's talk about their lithium strategy specifically.
Yeah.
They're making a big push into that space, as we discussed earlier. How do they see that market evolving over the next few years?
They believe the lithium market is poised for explosive growth. Demand for electric vehicle batteries is expected to skyrocket in the coming years.
Okay.
And Rio Tinto wants to be one of the main suppliers of the lithium that goes into those batteries.
So they're not just dipping their toes in the lithium pond, they're diving in head first.
That's right. They're acquiring lithium assets, building new production facilities, and forming strategic partnerships to secure their position in this rapidly growing market.
But lithium is a different beast than iron ore or copper.
Yeah.
It's a much smaller market, and there's a lot of competition from established players and new entrants. Do they really have what it takes to succeed in this new arena?
That's the big question. They're certainly bringing their experience in large-scale mining to the table, but they'll need to adapt quickly to the unique dynamics of the lithium market.
Wait.
It's a fast-moving space, and the technology is constantly evolving.
So it's not just about digging up lithium. It's about processing it, refining it, and getting it into the hands of battery manufacturers who are demanding, high-quality products.
Exactly. And they need to do all of that while keeping costs under control and managing the environmental impacts of lithium mining, which can be significant.
So there are definitely challenges ahead for Rio Tinto in the lithium market, but there's also a huge potential upside if they can execute their strategy effectively.
Right. If they can become a major player in the lithium supply chain, they could reap enormous profits as the demand for electric vehicles continues to grow.
Okay, we've covered a lot of ground in this deep dive into Rio Tinto's earnings call. They're a company in transition betting big on the future of mining and the global energy transition. But as with any investment, there are risks to consider.
Absolutely. Especially in the mining industry, which is notoriously cyclical and prone to, boom and bust cycles.
So what are the key takeaways for investors as they try to make sense of this company's future?
Well, first, Rio Tinto is undergoing a significant transformation, shifting from a predominantly iron ore-focused company to a more diversified producer of critical minerals.
Okay.
Second, they're making major bets on the energy transition and are positioning themselves to capitalize on the growing demand for metals like copper, aluminum, and lithium. Third, their success hinges on their ability to navigate geopolitical risks, operational challenges, and commodity price volatility, which is a tall order. And finally, they're trying to walk a tightrope between investing in future growth and maintaining their attractive dividend payout, which is something investors will be watching closely.
So there's a lot to like about Rio Tinto's story, but there are also some red flags that investors need to be aware of.
It's a company with a lot of potential, but also a lot of risk. Investors will need to do their own due diligence and decide whether they believe in Rio Tinto's vision for the future.
Now for the fun part, our This Is Not Financial Advices segment. Today, I'm going to throw out an outrageous but plausible trade idea for you.
Okay, I'm listening.
What if Rio Tinto decides to really double down on its North American presence and spin off its U.S. and Canadian assets into a separate company focused entirely on the energy transition? They could list it on the New York Stock Exchange and market it as a pure-play energy transition company.
Interesting idea. They could bundle together their Resolution copper project in Arizona, their aluminum smelters in Canada, and their lithium assets in Argentina. That would create a pretty compelling portfolio of critical minerals, all in stable, investor-friendly jurisdictions.
Exactly. And by listing it on the NYSE, they could tap into a larger pool of investors who are eager to put their money into companies that are aligned with the energy transition.
It's a bold move, but it's not entirely out of the realm of possibility. It would certainly signal a major commitment to the energy transition and could unlock a lot of value for shareholders.
Of course, this is just a thought experiment. It's not based on any inside information or rumors, but it does highlight the potential for creative corporate maneuvering as the world shifts toward a greener future.
It's definitely something for investors to keep in mind. As the energy transition picks up steam, we're likely to see more companies making bold moves like this to capitalize on the growing demand for critical minerals.
And that wraps up our deep dive into Rio Tinto's Q4 2024 earnings call. We hope you found this analysis insightful and helpful as you navigate the complex and ever-changing world of investing.
It was a pleasure to be here.
Thanks for joining us on Talk Tickers. Be sure to subscribe to our podcast and tune in next week for another deep dive into the world of earnings calls.
Until next time.